SFTW here, Osprey Technology, otherwise known, merging with BlackSky. So that's what I'd definitely say. Let's take a look first at the chart, and then I'm going to take a look at the investor deck of why I like it here, guys. So one of the things I'd first mention is that we're back in pricings that you could have got in February of 2020. So we're talking about you're definitely getting it at a discount than, let's say, everybody else that got it on the pop and the SPAC pullback. So that I definitely mentioned. But now let's start talking about the stock and see if it's leveling out. A lot of the times I like to look for some leveling out action. And so one of the things I definitely state is that I would call this the first bounce back up. And so I take that high and I start trying to draw a trend line from there and try to find a bottoming action here. And so I would point out a bottoming action somewhere near right now where we're at. We're getting really close towards this $10. And we keep kind of holding near this $10. I'm just trying to get it as close to 10 as possible. There you go, right on 10. And so we bounced right off of it, went back up, pulled back right down to it. I think I need to see a volume pop to really load up the boat. I'm not in this one right now, guys, but it's definitely on my radar. Reason why is it gets above this 1050 with some volume. I think we could push up back towards 1250, 13. Let's get into our investor presentation. And so right here is BlackSky. So one of the things that I'd first mention is, what is BlackSky? You know, what is it? So really what it is, guys, it's kind of like satellites imaging. And so one of the things that I've seen over time is that satellites is where I like to go to. I've already mentioned that, right? And so when I started doing a little bit more deep dive into this company, you start paying attention. You're like, okay, let's see why is it important and how are they differentiating than, let's say, someone else that does satellite imagery, right? And so right here, you can clearly see, I'm going to zoom in here so we can read it a little bit better, but the lowest cost imagery capture. If we're going to take a lot of imagery from space, right, it's going to cost money, right? And so what is the cost for that? And this is an estimated monthly cost for the daily imaging collection. So you're talking about monthly cost here, and this is in the thousands. So we're talking about 120,000 or 12,000. You see the difference there, right? 90% difference there in price. I think that right there, already competitive advantage, right? To, let's say, legacy satellite imaging. And then we can go down a little bit more. What is their plans? What are they trying to get into? You know, where they're really trying to get to? You know, and you can look here. Let's start looking at what they're kind of serving, and they serve a large and expanding market here. This is enabling the infrastructure here, and look at this. Look at this. So you got satellite companies like Airbus, Boeing, Maxar, SpaceX, Lockheed Martin. You can look at launch companies like SpaceX, Virgin, Blue Origin. You can look at space-based communication, Amazon, Intelsatellite, SpaceX, Telesat. And really where this is going into is the space data and analytics, because I think, you know, the thing behind the thing, right? We always talk about it, right? So this is the data. And you look here, in 2020, the TAM is 13 billion. By 2025, they have the TAM up to $40 billion. And that's the addressable market, if you guys don't know what TAM means. And so it's really interesting to watch how they're going to expand. They already got deals. I mean, they deal with my favorite company, Maxar, you know. There's a reason why I kind of looked at this company. And then if we can go a little bit further, we see how much their kind of growth plan really kind of takes off as 2021 comes into play and 2025 comes into that real expansion period. And so right here, I'm really seeing this company, I feel they're going to really take off in that 2021. It may not be the best play today, but in the long term, I truly think this company is going to be up there with a company like Maxar and competing in this industry. And so it's going to be fun. Who do they have relationships with? It's what I always talk about when I look in space, guys. I want to see connections with people like, let's say, right here, you see the U.S. Air Force being mentioned, the Air Force Research Laboratory, U.S. Army, Defense Innovation Unit, the U.S. Air Force, Strategic Middle Eastern Ministry of Defense. What does that mean? Defense contracts, that money in the revenue. And that's what I look for, guys. I look for contracts because I feel over time, consumers can change their opinions, but a lot of the times you're going to see these contracts get paid out. That's why I liked Maxar over time. And that's where I feel Maxar got the lift over time. So there's a lot of areas they can get into, whether it be agriculture. A lot of people want to kind of worry more about using technology to better agriculture. There's going to be mining, manufacturing, environmental, engineering, construction, energies, and utility. There's just a big area where they can attack. And it's going to be interesting to watch this company expand over in the next couple of years.
So my pick I have for space, which I had an article out, which I will drop in the chat. So keeping with your space theme here, Mitch, I want to dive into GNPK, which is taking Redwire public. So Redwire, the more I look at this, the more I like it. This is a space infrastructure company. And it really could be a mini space ETF on its own based on the industries that it's in and the partners it has. So, Mitch just shared a space pick that the global space market could hit $2 trillion by 2040, according to estimates. So this deal for Redwire values the company at $645 million. Shareholders are going to own 24% of the company, which I like that percent. It's pretty high for some of these deals we've seen. And the presentation highlights that when space wins, Redwire wins. So Genesis Park, which manages the SPAC, has a strong relationship with NASA, the U.S. Air Force, and the U.S. Space Force. So as Mitch said, look at those partners for these space things. So this is the first SPAC merger with a company going public that has collaboration and validation from both a space or aerospace sponsor and a space or aerospace SPAC partner. So both parties here, strong connections to the space industry. I love seeing that. And then some facts about the company. So Redwire, they're a pure play space company. They cover several areas of the market. Over 50 years experience in space flights, over 150 missions flown on, unmatched innovations. And we talk about patents, right? And intellectual property. Redwire has over 100 industry patents. Their infrastructure services nearly every space mission. So every time a company goes to space, Redwire is involved more than likely. They're also an undisputed leader in 3D printing, manufacturing, and robotic assembly in space. They were the first to make 3D print tools and spare parts in space. They also have enabled every U.S. mission to Mars. They went to Pluto, and they've landed on multiple asteroids, and they have guided every GPS mission to space. They launched the first spacecraft that built and assembled itself thanks to that 3D printing. So we talk about the thing behind the thing, right? The pick and shovel play. They flat out say it in their investor presentation. Redwire is supplying the picks and shovels that enable nearly every space mission, the CEO said. So they're going to focus on 5 key strategic areas of growth: on-orbit servicing, assembly, and manufacturing, low Earth orbit commercialization, digitally engineered spacecraft, space domain awareness, and advanced sensors and components. So they were purpose-built to be a pure-play space company. Revenue last year was $119 million. Fiscal 2021 estimate is $163 million, and that's split 52% civil, 34% national security, and 14% commercial. But they see that shifting. So by 2025, they see it being 20% civil, 39% national security, and 41% commercial. So as we see national security grow and we see commercial business to space grow, Redwire thinks they can get bigger pieces of those pies. and they see compounded annual growth of 72% from 2021 to 2025. They have a current backlog of $150 million, but they also have a pipeline that they see worth up to $23 billion from identifiable contracts. So GNPK, and again, this deal valued the company at around $600 million. They had news out yesterday from NASA, and shares were up yesterday on that. They've already fallen back down. This is one that I think could be the best of breed for the space SPACs. I don't have a position yet, but this is on my watch, and I'm looking for that. GNPK with Redwire, one of my favorites in the space, pun intended.